Yeah, good morning, everyone. So yesterday we saw that the US market bit correcting. Uh, the news was that the Fitch has downgraded the US foreign rating from AAA to AA plus. Uh, the news is sentimentally negative. It will not have a direct large impact on the any of the operations or any of the decisions of the fund house to buy US Treasury bond. Generally, all large fund which buy Treasury bond see two ratings rather than out of the three large ratings, that is S&P, Moody, and Fitch. Out of that, one is AA, but the other two are still AAA. So as such, right now will not have much impact, but definitely create some risk of another rating agency downgrading the US rating. Then it will have a larger impact on the bond buying of the fund, which will then won't be able to buy because there are funds which buy only AAA rated funds. So, if we see the other markets related to that, US futures were down by around 0.5% post this news. And apart from that, dollar index is more of a stable. Bond yield has increased 10-year bond yield by around 4-5 basis points, and gold is also more of a stable. So, as such, other markets are not seeing any large impact of this. But Asian market are seeing larger impact. Most of the markets are down by around 1.5%. So today will be a riskier trade or will be a volatile day for today because we have a lot of leverage positions specifically in mid cap, small cap stock, and if the momentum of selling starts, then it can continue for the day. What we see that this news can have impact for 1 or 2 days, but do not change larger outlook. So need to be careful in today's trade because of that. If you see the commodity, the oil is further up by around $0.5. And another thing is iron ore is down by around zero point 0.5 and steel is more of a flattish. So need to be careful in today's trade. And I'll request technical people to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Pati. Today, the market is likely to open bit on a negative note, and we're likely to witness some sideways momentum during the day. Yesterday, Nifty managed to maintain a closing above 19,770 levels, which gives some sort of a relief sign. But looking towards the world indices or the Asian markets, we believe we might witness some profit bookings at the higher level. Now, the first resistance is placed on the Nifty is at around 19,820. As long as it sustains below that level, we are likely to witness some sort of a profit booking into the market. Any move above the same level on the closing basis will only witness the further upside towards 19,900 and 20,000 levels. Whereas on a downside, as of now, the immediate support is placed at 19,640. Below that level, 19,550 levels can be tested on the lower end. As of now, we believe that it's a stock specific markets because we are witnessing some sectorial rotation. Mid caps are really doing very well. So one should be more emphasized into the stock specific trading, but trade each and every transaction with the strict stop losses. Now coming towards the bank nifty, for today intraday purpose, the first support is placed at 45,600. Below that level, 45,440 can be seen on the downside. On the high side, 46,000 will act as a strong psychological resistance level. If it surpasses that level on the closing basis, then only we can witness positive momentum on a further upside towards 46,250 to 46,500 levels. So the view is a bit cautious on both the indices. Coming towards the Nifty Finance Services, 20,700, 20,800 are the crucial resistance zone. Whereas on the downside, 20,520, 20,440 are the crucial support levels for the Nifty Fin Services. Yesterday, we was witnessing a very good buying into the IT packs. We have given a buy call on the Tech Mahindra as well, nearly by 11,1139, that is 1139 levels. So one can look for the buying at the current market price as well. We believe it has a potential to reach up to 1180, that is 1180 levels on the higher side. Place a stop loss of 1120. That's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, looking at the overall open interest and the data, uh, wise, the only negative here is that we are seeing some call built up at the 19700, 800, and 900 strike. Sorry, 19700, 19800, 19900 strike calls. So that is a bit negative. There is some aggressive built up in these strikes. However, the PCR is still just near the one level, so nothing to worry there. VIX also, after going up to 12 odd level, it has cooled off to 10 and a half. So no real signs of worry. It can probably shoot up today, but unless it goes above the 15 levels, it is still at comfortable levels. Open interest also at 1.2 crores is not very high. So all in all, data is still positive largely. So nothing to worry. We might just see some consolidation in Nifty up to 19500. From 19500 to 19800 is the range at this point of time, what Nifty is suggesting. So buy on dips would be a better strategy going forward. From a stock specific front, looking at the stocks, pharma sector, a lot of stocks continue to witness good momentum. They have broken out, and they are likely to continue their rally going forward. So yeah, pharma is one sector where one should be looking to trade. So Dr. Reddy, Divi's Lab, Laurus Labs, all of these stocks have witnessed price volume breakouts and are likely to witness further buying. So look out for the same. They might give good returns in the next couple of days. Yeah, that's it from my side. I like to ask the fundamental team to take over, please.
Good morning. GE Power India received an EPC contract worth rupees 444 crore from Gujarat State Electricity Corporation for an FGD system. The order will be executed within 30 months. This is positive. Aptus Value Housing Finance result is marginally below expectation. Loan growth was at 29% year-on-year, 6% sequentially. There was a marginal dip in net interest margin due to which the quarter-on-quarter operating profit was flat against expectation of a 5% growth. Asset quality saw a marginal spike of 14 basis points to 1.3% due to seasonality. GNPA went up slightly. Its peers like Home First and even larger housing companies like Canfin also saw a similar trend on the asset quality side. So we remain positive from long-term point of view. Cholamandalam Investment and Finance result is below expectation due to higher credit cost, which came at 1.3% against expectation of 0.9%. AUM growth continued to remain strong at 40% year-on-year and 8% quarter-on-quarter. All segments grew well. Vehicle was up 28%, LAP 29%, home loan 60%, and new businesses up almost 3 times from low base of last year. The new businesses now form around 10% of total AUM. Net interest margin for Chola in line with other large NBFCs also declined by 50 basis points to 7.3% as all products have fixed yields. Asset quality improved with NPS declining by 30 basis points. GNPA was at 4.3 and net NPA 2.8. We are neutral in near term for Chola and positive from long term point of view. Thermax result is below expectation on both revenue and margin fronts. Revenue grew 17% year-on-year. EBITDA margin came at 6.8% against estimate of 7.5%. However, on order inflow and order book front, both continue to see gradual growth of 10 to 12% on year-on-year and quarter-on-quarter basis. We are neutral on Thermax in the near term, but positive from long term. Kirloskar Brother result improved. Revenue grew 15% year-on-year. EBITDA margin came at 12% against March quarter's 13%. And last year margin was at just 5%. So on year-on-year basis, profit has gone up from 15 crores to 59 crores. We remain positive. Stock has done well. In fact, post result, it went up yesterday itself, but the trend should continue to be up. Sirma SGS result is below expectation. Revenue was above estimate and grew 54%. However, EBITDA margin came at 6% versus estimate of 9%. And even historically, last few quarters, the margin has been at around 9%. Hence, profit came at 29 crores against estimate of 37 crores. We are neutral in near term and positive from long term point of view. Thank you.
Good morning. Reddington has posted below expectation numbers for the quarter, both on the revenue and the margin front. Revenue came in 3% QOQ lower, and EBITDA margin came at 2% versus expectation of 2.6%, QOQ of 2.5%. PAT came in at 248 crores versus QOQ of 310 crores. Stock is trading at 9.7 times FY24 EPS. Thank you.
Yeah, good morning. Prakash Industries reported improving set of numbers. Revenue grew by 13% year on year, mainly due to 32% growth in volumes. EBITDA came in at 118 crores versus 108 crores sequentially and 100 crores year on year. Margins improved by 90 basis points to 11.6%. The stock is trading at PE of 7 times on TTM basis. Orient Cement reported below expectation numbers, mainly due to lower volumes and lower realization. Revenue came in at 825 crores versus expectation of 778, but was lower on a sequential basis. EBITDA came in at 104 crores versus expectation of 119 crores. Margins came in at 12.6% versus expectation of 15%. The stock is trading at 5.4 times FY24 earnings. Maharashtra Seamless reported declining set of numbers, mainly due to lower volumes in seamless sales. Revenue came in at 1223 crores versus 1633 crores sequentially. EBITDA was down by 24% sequentially to 244 crores versus 321 crores. The stock is trading at PE of 7.5 times on a trailing EPS. Coal India Limited reported its offtake for July month, which stood at 59.5 million ton, up by 1% month on month and 9% year on year. NMDC's iron ore sales for July came in at 3 million ton, down by 26% month on month. So this is negative for NMDC. Apart from this, Dalmia Bharat's step down wholly owned subsidiary, Dalmia Bharat Green Vision Limited, has commenced commercial production of its 2 million ton greenfield cement grinding unit at Satur. With this, company's cement capacity stands at 43.7 million ton. So this is neutral for Dalmia Bharat. Thank you.
Good morning. We had a con call of Navin Florin International Limited yesterday, and post the con call, our view is positive over the long term for the company, as the outlook is based on its strong pipeline for specialty chemicals and CDMO business, where the growth is expected to be driven by volume, and their complex new molecules are having higher margins. Also, despite the challenges in a global agrochem space, the company's dedicated plant is running at full capacity. The company is focusing on the engagement with innovators, which is driving the growth. HFO plant for Honeywell was successfully implemented, and it is also discussing over 2 more projects which are at advanced stage. Further, it has signed an agreement with the Fermion for 3 late-stage molecules, of which one is already commercialized. And cumulative revenue from this opportunity is expected to be at $40 billion over 3 years, starting calendar year 25. So we are positive over the long term on this company. Anupam Rasayan India Limited result was marginally below expectations. The revenue grew by 26% on a YOY basis at rupees 386 crore. The operating margins are at 26.2% versus the expectation of 25.2%. So although there was decline in commodity agrochemicals, the company's customized products and the contract-based business model has helped them to sustain the strong EBITDA margins. During the quarter, it has signed 2 LOIs worth rupees 4,066 crore for niche life sciences and specialty chemical molecules with Japanese and American MNCs. Also, it has signed MOU with 3X per Innoventure for supply of targeted identified new age pharma molecules. And it is expected to launch the 10 new molecules in FY24, of which 2 new fluorinated pharma molecules has been launched. In terms of capex, it has incurred 124 crore out of 670 crore of capex announced, and majority of the capex is to be incurred in FY24. That is the management plan. The stock is currently trading at a PE of 39.3 times to FY24 EPS, and we are positive on the company. Bikaji Foods International Limited result was broadly in line with expectations. The revenue grew by 15% YOY at rupees 482 crore. It has delivered the volume growth of 15% on a YOY basis. Operating margins came at 13.6% versus the expectation of 13.8%. This was led by the operating efficiency and the superior mix and it has increased its direct coverage by 13,000 outlets in the quarter, and it is expected to reach 1.5 lakh outlets by FY24. The stock is trading at a PE of 65.4 times to FY24 EPS. The stock has rallied since the news of its acquisitions, where it has acquired 49% stake in Bhujialaji for rupees 5 crore, where the company is a new entrant in the industry. Any correction in the stock would be a better opportunity to enter with a long-term investment view. Thank you.
Good morning. Auto OEMs posted their auto numbers yesterday for the July month, which posted mixed performance, and exports for majority of them were weak. In the CV segment, overall volume declined by 6% on month-on-month basis and 2% on YOY, whereby mixed review was seen, as with the exception of M&M, which reported numbers ahead of expectation at 66,124 units versus expectation of 62,383 units, which grew by 18% on YOY. Also, Ashok Leyland sales were above expectation, as sales came at 15,068 units versus expectation of 14,217 units, which grew by 11% on YOY basis. Rest others, including VECV, Tata Motors, and Maruti Suzuki, reported a decline in CV sales. On PV segment, it grew by 11% on MOM basis and 5% on YOY. M&M reported strong growth of 10% on monthly basis and 26% on YOY basis, whereby Maruti reported growth of 3% YOY and 14% on month basis, which was led by strong sales in SUV segment. Also, the demand for entry-level cars in Maruti declined by 29% on YOY, and which was flattish on month basis. On two-wheeler segment, overall volume declined by 5% on month basis and 3% yearly, except TVS Motors, which reported growth of 4% YOY and 3% on monthly basis. Despite several launches in two-wheeler premium segment in July 23, sales of Royal Enfield bikes were below expectation, which came at 73,117 units versus expectation of 75,167 units, which grew by 29% on YOY. Three-wheeler segment continued to perform strongly, growing by 20% YOY basis. On tractor segment, which declined by 26% monthly basis and 7% degrowth was found on yearly basis. Despite this, Escorts Kubota reported above expectation numbers with total sales coming at 5,570 units versus expectation of 5,200 units, which also grew by 4% on yearly basis. On result sides, Escorts Kubota results was ahead of expectation as revenue came at 2,327 crores versus expectation of 2,248 crores, which grew by 6.6% on quarterly basis and 15.5% on yearly basis. EBITDA margin came at 14% versus expectation of 11.4% versus 10% on year basis and 10.8% on Q basis, which was led by operating leverage in construction and railway segments sequentially and better realization and softening of commodity cost. The company had its con call yesterday, whereby the management stated that during the quarter, it got the approval of capital reduction of 2.14 crores equity shares, which got effective from 29th May 23. It also stated about various of its segments, whereby agriculture machinery business under agriculture machinery business, company's domestic tractor volume grew by 9.3% on Q basis and 2.5% on YOY, resulting in 41 basis point gain in market share to 9.7%. In future, the management feels that this segment may register low single digit growth led by adequate reservoir levels, better crop prices, better liquidity, and better credit availability. On construction equipment side, the revenue came at 360 crores, which grew by 46% on YOY due to better product mix and price realization. Despite the onshore of monsoon, there is sustained demand for construction industry led by government faster execution of infrastructure projects. Hence, the same demand to continue further. On railway division, highest ever quarterly revenue came at 297 crores, which grew by 71% on YOY basis. And the order book for this division is 950 crores, and management is positive on this segmental growth and expansion. At present, the stock is trading at PE of 30 times FY24 EPS. Thank you.
Thank you, sir. Very good morning, all of you. In today's trading session, USD and R, we are expecting some more upside. So if we get any profit booking levels around 82.82 to 82.42 to 82.40 levels, so one can initiate a long positions with a strict stop loss of 82.32 levels for the target of 82.55 and 82.68 levels. In Euro INR, one can initiate a long positions around 90.55 to 90.40 levels with a stop loss of 90.19 levels for the target of 90.80 and 90.93 levels. Thank you.